packaging group Astrapak reported a 3.9% rise in fully diluted headline earnings per share to 24 cents for the 6 months ended August 2011 from 23.1 cents previously. Astrapak reported turnover declined to 1.3 billion rand from 1.35 billion rand, mainly as a result of a 5.5% decline in volumes.
Astrapak market cap 1 billion on the nose, price earnings 10.7 and a dividend yield of 3.3. Craig, let's come to you in Cape Town first. There's a fair bunch to pull out from the numbers, but what I went to first and found was operating margins at 5.5, same, well, 5.3 for the first 6 months of last year, but down from 7% for the full year. Now, either they get a boom during Christmas time, and maybe that second half of the year is a bit better for them, or they're struggling to get some level of consistency in their operating margins.
Yeah, well, look, we've seen the situation over the last 3 years with packaging as a whole. I think Nampak, in the new unbundled entity from Mondi, Impact's also gone through a bit of operating pressure, and it's probably a factor to do with imports, so there isn't that level of demand on the revenue side, and we saw that with revenue coming down. So as a result, one needs to be very competitive in the marketplace if you're going to get manufacturers to use your product. So I think that's the big factor. Also, there's a bit of a push on costs from, they use polymers as their main import cost, which is of course derived from the price of oil, and we've seen oil prices go up even in rand terms. And so that's obviously also put pressure on the bottom line.
Daniel, let's bring you in on the desk. Craig mentioned that their input costs is polymers, which is essentially oil. Not a heck lot they can do about that. The flip side is the strong rand. Well, it helps bring that polymer cost down, but it also helps the importers. And there's, again, not a heck lot they can do about that. Two things which are, to a fair degree, driving their business, impacting it negatively, and management is hamstrung by it.
And positively when the rand,
absolutely, there's a flip side to it when oil goes to 30.
Yeah, they can't account for the oil price and the rand price, and they've got no idea where those commodities will be moving and the currencies. So they have to look at that very, very closely. Obviously, they would like a very stable rand because they can't really judge or gauge where their earnings will come from in the future if the rand is so volatile. So they definitely prefer a more stable rand.
So in fact, stable more than a particular level. If you could say to them the rand will be X, that's what they would actually care about most.
Correct. Also, I mean, they've still got a lot of problems coming from South America in terms of imports from Brazil and Argentina. Now, with a stronger rand, it actually bodes a lot better it's a lot better for the business to going forward.
Let's go over to Craig in Cape Town now. I'd like to focus specifically on the strike action, which impacted them quite severely in the month of July in particular. Volumes down 5.5%, industrial action impacting 80% of the group's operations. And when we look at the 6 months to end August 2010, they lost between 4 and 16 weeks of work. Now, we're not just talking about work stoppages. There's also a negative impact on efficiencies and the group's operating margins. And it seems to me that in the interests of performance, it is incumbent upon management to settle these wage disputes sooner rather than later.
Yeah, look, I mean, this was an industry-wide strike, so I'm not too sure what specific impact it would have had on Astrapak as opposed to its competitors. And of course, strikes this year has been part of factors for numerous industries. So one likes to just say, look, it's put to bed this year. It's difficult to know what to factor in next year for that, and maybe what production would have been without it. But it's one of those risks in the industry.
Craig, coming back to costs and the like, and Daniel was mentioning what they can't control, which is oil and rand. What they can control, and their selling, administration and distribution overheads actually came down 185 million versus 200 million for the previous period. That does show that management, what they can control, they're managing to control fairly well, and a about a 7.5% reduction in this environment, not bad.
Yeah. Look, I think what I'd like to see is help them to get their inflows, shorten their debtors book, be able to improve their cash position a bit, and maybe reduce their gearing. I do like companies with gearing, but I think their gearing is a little bit on the high side. So those are things that concern me a little bit in the financials, but it may well be a factor with the reduced revenue and other pressures that they've had, and maybe going forward they'll be able to improve those issues. Yeah,
you mentioned debt. I mean, short-term debt at 171 always bothers me. Net debt 406 versus 383. Debt's still an issue here. Daniel, bringing it back to you. Packaging broadly is going to be an industry, I'm going to imagine, margin, which really needs good old-fashioned GDP growth. We need a growing economy, and that's what's going to drive it. Certainly that was always, I can remember way back, my grandfather used to say, you know what, at the worst days of the recession, you buy a packaging company because when things improve, they'll improve. I suppose it's still tough out there, but we haven't seen those massive improvements flowing through.
Yeah, of course. Look, with GDP really slowing down, and the euro crisis and global slowdown, you need demand. If there's no demand coming through to Pick n Pay and Spar, and people aren't buying products, which are packaged by Astrapak and the likes of Nampak and all the competitors. If there's no buying, then there won't be any demand for actual products of plastics.
Craig, last question. I mean, the key thing to me was a comment towards the end of the update of the results this morning. The group expects that the challenging market conditions will remain over the next 6 months. I mean, essentially, the board of directors are saying it's tough and we don't see it improving anytime soon. And as shareholders, I mean, we should take cognizance of that and say, well, if they say it's not going to get better in a hurry, we certainly shouldn't disbelieve them.
Yeah, look, I think they're waiting for something magical to happen. If the rand goes down to $11, $12, as it did was a decade or so ago, we actually saw packaging firms, Astrapak being one of them. I think it ran from about £2.30 all the way up close to levels that it is now. So it needs that kind of scenario to really give it a catalyst. But if things plod along the way they are, it's not an exciting sector, not an exciting company for me.
Craig, it doesn't sound like you're giving it a hot then.
No, not as things stand at the moment. No.
Not hot for Craig. Daniel, how do you feel about Astrapak?
Astrapak is down 20% year to date, so it's really reflecting in the share price. The pressures are really coming through on the bottom line. We can see in the numbers. So for me, not hot.
Simon Brown, it sounds like we should send Astrapak packing.
No, we should. When we get booming again, and it might be a long time before anyone's booming again, then the packaging companies are great. Right now, Astrapak, they're doing all right in tough times, but not hot.
Not hot here in studio. Let's move on now. Plastic and carbonated soft drinks maker Bowler Metcalf gained 30 cents or 3.5% to R8.90 and has reported that it has maintained its 24-year run of annually increasing earnings in the year to June, despite hesitant market conditions. But it said rand uncertainty and renewed global financial woes made long-term planning difficult in the fast-moving consumer goods market.
Bowler Metcalf's got a market cap of 787 million, a price earnings of 11.6 and a dividend yield of 4. Craig, let's come to you first. I think this is probably the first time I've ever really delved into the company. I've obviously seen it around on the exchange and never bothered to dig, certainly never bought it or sold it. And I say when I dug into it, I see a little company, a fairly specialized company, but a company that seems to do what they do very well. And the one number that jumped out, now go back to operating margins, sitting at 19.1 versus 18.8. Either of those numbers is significantly impressive, particularly in the two spaces that they operate.
Yeah, the operating margins are very impressive. But the consistency of the performance is what's been impressive about this company, as they put out in the front 24 years of consistent performance, and really we haven't seen any significant declines. Cash flow's been there. The company's reinvented itself slightly in that it focused mainly on producing bottles on the packaging side, but of course now they're filling them too, and that's been pretty successful in KwaZulu-Natal, Western Cape, and now there's a plant going up in Gauteng, which I think starts now this month. So there's quite a lot happening, and management seem to deserve a pat on the back.
Daniel, let's just chat about that vertical integration strategy as opposed to more acquisitive growth, because now, as Craig mentioned, they're going to be producing, filling and marketing the bottles themselves. What is your take on that? Is it a good move? Should they have gone more the acquisitive route or not?
I like what they've done. They've actually got 4 properties. One of them is in the Western Cape, which has actually done very, very well with the beverage business. Now they're opening this new plant, as Craig said, in Boksburg actually. What they did was they actually supplied the packaging for the carbonated drinks, and now they decided to actually take it 1 step further and actually make the drink itself, market it and distribute it. So very nice angle that they've taken. I think it's very bright, very clever ideas. Management, as Craig said as well, they've had 24 years of consistent growth. I think 3 out of 5 years they've been a top 100 company on the JSE, so very good management. I think people really like the story. And I think it's one, as a small cap, one could definitely add to an equity portfolio.
You mentioned that vertical integration and really liking it. Now, I mean, the one side of me says, whoa, hang on, you make bottles, now you want to fill them, and this is a whole different game. You've got to get marketing, and they're getting Hashim Amla, the cricket, to come and be their brand spokesperson, etc. All very nice as a cricket fan. I suppose what we're saying, though, is, heck, management have over 24 years proved themselves. Yes, it's a new area, but what we can see from looking at the numbers and looking at the business, they're top management. And there's always risks in new ventures, but perhaps that quality of management slightly reduces the risk.
Well, it shows they're thinking out the box. And that business has already proven successful. They've already made a lot of revenue from that business, coming from the Western Cape. So now bringing it into the Gauteng area and trying to leverage into the Joburg space, Joburg, Pretoria perhaps, I think it can continue, and I think there's a lot of scope for growth still for that business.
Coming to Craig in Cape Town, relative to Nampak, are we seeing a David and Goliath situation as far as the company strategies are concerned? Because obviously this company has had a single-minded focus for years, and Nampak has just been growing phenomenally. What do you make of the two? How would it measure up relative to Nampak, which is obviously a bigger cap player?
Yeah, and I think their type of packaging, in the plastic side and bottling, is a lot more focused. And as a result, they can fill and focus on it because they understand who their competitors are, because they're still supplying competitors with bottling, so they understand that space. And they've tackled it geographically, building up the Western Cape, KwaZulu-Natal, now looking at Gauteng. So from that point of view, I think it's a slightly different picture. I wouldn't compare it exactly with Nampak. Yeah, and as said, they've built up property, so the balance sheet is strong. I think it's trading at about 1.7 NAV, and they've held on to a lot of the technology as opposed to Nampak, which sells it out and makes annuity income off it. It's a slightly different business model.
Craig, they're also coming under pressure from cost inputs, raw materials up between 11 and 21%, electricity 40%, labour 7.8%. None of that's new. I mean, every company we talk about is experiencing it. I suppose what is new is that these guys are seemingly, and again it comes back to the management story, they're managing those costs fairly well, or they're managing the other costs because it isn't taking a massive dent out of their profits.
Yeah, those type of input costs all their competitors are going to have as well. So as you say, it's how they manage it that makes the difference. And if you're coming to the stage of whether it's hot or not, obviously for many of the reasons that I've seen in management taking the appropriate action, I like the story. I think, in fact, last time I looked at the share, it was over 10 Rand. So when I saw the price today, I was surprised. I think it's showing fairly good value and a nice dividend yield of over 4% too.
Liquidity doesn't bother you? We see it often with the small caps. Staying with you in Cape Town, Craig, small caps, liquidity is often a problem, often widespread. I suppose it's one of the benefits of being an individual investor. You're not looking to put millions or even tens of millions in. You can take smaller positions. It still adds an element of risk.
You're talking to me?
Yes, sorry, Craig, yes.
Yeah, sorry, I missed the beginning of it, but I caught the last part of the question. But yeah, there is an element of risk. It's not a very liquid stock, and that's probably also why you haven't looked at it in great detail. And the last time I saw it around 10 Rand, there wasn't much. There were the gap between buyers and sellers was quite wide, that spread. So I think it's one of those that you would buy and you would hold and run with the story for some time. And if you've got cash that you want to put away, I do think it's a good share from that perspective.
Coming to Daniel now at the desk, Craig mentioning that 10 Rand share price level. This is the company that listed on the JSE in 1987 at 14 cents. So would you say that the good news has been priced in, or is there more good news to come?
Well, I would say there's more good news to come. It really has been a long time since it listed. And the results, are proving fruitful at this stage. So, with growing and investing into new assets like they are, and actually they've just acquired that beverage business. They actually only own 75%. They've just now actually acquired the rest of the business. So, making moves like that strategically, I think, in time, I don't think it's really priced in now. I think those earnings will still come through at a later stage. And yeah, I like the stock. I agree with Craig as well. I think at these sort of levels, even though the liquidity is not great to get in, I think, if you would like to accumulate stock, you'd have to sit on the bid at a certain price where you feel comfortable, perhaps where there's some value. Good dividend yield, as Craig said as well, 4%. So the stock looks good. And
that liquidity means that you're not going to be trading it. You're going to be holding it, and you're going to be holding it for time, 3, 5, maybe even 10 years. Yeah, definitely. I mean, as a small cap as well, I think you actually need to hold those shares for a longer period of time. With the likes of Anglo's or Billiton, you could actually trade out of
of quite easily because of the liquidity. So yeah, a stock like this, I definitely think you'd have to hold for a longer period of time, take a view, look at their track record and see, geez, these guys have made money for 25 years consistently and grown over 25 years consistently. So why would that, I'm sure that would continue as they are expanding as they are.
Simon Brown, is Bowler Metcalf proof that there are entrepreneurial assets to trade on the JSE?
There is, and I would never have spotted it. And I must say, when I first started doing my research on it, first thing is I go to their website, and it's nothing. It's one picture, and I thought, oh no, another one of these. And they were a little scant on information in their results as well. I like chunky results and the like. But the more I dug about it, and then chatting with these guys on the desk now this evening, I think it's a good looking company. Certainly we can see it's got good management. You can see that management in the balance sheets and the cash flow statements. That's critically important. The liquidity is a risk. That's always a bit of a worry. But I mean, aside from that, if you've got time on your side, you're prepared to hold it for some time, I think Bowler Metcalf, hot.